Welcome to the G2 Weekly Market Update, where we break down the key developments shaping global markets and the economy. As we begin the new year, markets reflected lighter holiday trading, evolving central bank expectations, and early signals from housing, labor, and inflation trends across major regions. United States. US equity markets declined in the holiday shortened week, although major indexes wrapped up 2025 with strong double digit gains for the third consecutive year. The Nasdaq Composite underperformed amid lingering concerns around technology valuations, while the Dow Jones Industrial Average and S&P Midcap 400 were relatively resilient. Energy stocks stood out as geopolitical tensions supported higher oil prices even as overall trading volumes remained light due to the New Year holiday. On the economic front, signs of resilience emerged in the housing market. Pending home sales rose at the fastest pace in nearly 3 years, supported by easing mortgage rates and solid wage growth, suggesting improving affordability for buyers. House prices also rebounded modestly on a monthly basis, so annual gains remained subdued. Federal Reserve minutes from December highlighted divisions among policymakers, while most officials remain open to further rate cuts if inflation continues to ease. Some favored keeping rates unchanged for a period. Labor market data remained firm, with jobless claims falling for a third consecutive week, signaling ongoing stability in employment conditions. In fixed income markets, high yield bonds outperformed amid light trading activity, while treasuries showed mixed performance. Europe. European equities extended their rally, with the Stocks Europe 600 reaching a new record high and closing 2025 with its strongest annual performance since 2021. Gains were broad based across major markets, supported by improving sentiment around growth prospects heading into 2026. Inflation data remained mixed. Spain reported a modest easing in headline inflation driven by lower fuel prices while core inflation remains sticky. In France, registered unemployment declined modestly from recent highs, although levels remained elevated on a year over year basis. In the UK, house prices unexpectedly weakened in December, pointing to continued sensitivity in the housing market amid higher borrowing costs. Meanwhile, Sweden's central bank signaled that interest rates are likely to remain on hold through much of 2026, reinforcing expectations of a prolonged pause across parts of Europe. Japan. Japanese equity markets pulled back slightly in a holiday shortened week after a strong performance throughout 2025. The rally over the year was driven largely by technology and AI linked stocks, supported by solid earnings and resilient domestic economy. Bond yields continued to rise, with the 10-year Japanese government bond reaching its highest level since 1999, reflecting expectations of further gradual tightening by the Bank of Japan and concerns around fiscal expansion. The yen remained weak, trading near multi month lows against the US dollar, fueling speculation around potential currency intervention. Bank of Japan communications reinforced the case for continued normalization, citing strong corporate profits, wage growth, and reduced external risks. China. Chinese markets were mixed in a holiday shortened week. Mainland equities were largely unchanged, while Hong Kong stocks posted gains. Manufacturing data provided a modest positive surprise, with the official PMI moving back into expansion territory in December after 8 months of contraction. While the improvement offered some reassurance, broader challenges persist, particularly around domestic consumption. Economists generally expect Beijing to adopt a measured stimulus approach in 2026, balancing growth support with long term structural priorities. G2 takeaway. As 2026 begins, markets are navigating a transition phase. The US economy continues to show resilience. Europe enters the year with renewed momentum. Japan moves further along its policy normalization path, and China delivers early signs of stabilization, with central banks increasingly data dependent and geopolitical risks still present, volatility is likely to remain a key theme. Investors should stay focused on fundamentals, policy signals, and regional divergence shaping the global outlook. Thank you for watching the G2 Weekly Market Update. Stay connected with G2 Finance Tech for clear, timely insights into global markets. We look forward to bringing you more updates in the weeks ahead. Thank you.